Digital asset prices are subjected to high market risk and price volatility. This means that the value of your investment might go up as well as down, and you might not get the amount you invested back. You're solely responsible for your investment decisions, and the conversations that will take place here today do not constitute investment advice or a recommendation to trade in any digital assets. That being said, again, thank you to everyone that has been signing up for this episode. It's going to be a huge one, knowledge-packed with information. I would like to introduce the speakers that are going to be here today. Tracy from CV Labs, Markus and Philipp, Markus from Sygnum Bank and Philipp from Z22 Technologies. Without further ado, I would like to give the floors to them for a full introduction.
Great. I guess I get to go first. Thank you so much for having me. First of all, Michaela, really excited to be here. As mentioned, my name is Tracy Tachsler. I'm the managing director of CV Labs, a daughter company of CVVC. CVVC is an early stage venture capital firm with a focus on early stage blockchain investments. We're focusing a lot on the application side of things. And the CV Labs component comes in as both the startup accelerator and sort of the ecosystem engagement platform. Really happy to be here.
Philipp, Markus,
so also,
next.
Yeah, if I can go next. So thank you very much, Michaela, for the invitation. It's great to be here with such an interesting panel. So my name is Philipp. I'm one of the two founders and owners of Z22 Technologies. We are a FINMA-regulated machine learning hedge fund based here in Zug, and we specialize in volatility trading in TradFi as well as crypto. And I think if you think about volatility, you soon end up in crypto as one of the most volatile asset classes out there at the moment for investing. And our link to Binance is one of our most important brokers that we use in our trading strategies. And we definitely appreciate the liquidity on your platform and the stability of your tech stack, especially the APIs that we use as a machine learning and quant hedge fund.
Yes, hey everyone, it's Markus from Sygnum Bank. I'm heading portfolio management at Sygnum Asset Management. Sygnum is a technology company and a service provider within the crypto asset space, and as well a fully licensed bank in Switzerland. So it's great to be here. Looking forward to the discussion we have, and thanks for having me.
Great. It's really an honor to interview you, all of you today. I think your career journey, all of you, is a league on its own. And without holding back our audience any longer, let's step right into the heart of this episode. I would like to make the first question on the Swiss digital asset ecosystem. What factors have contributed to Switzerland becoming one of the leading blockchain and digital asset hubs globally? Tracy, would you like to take the lead here?
Sure, happy to. I think there's a number of factors. Maybe one that gets talked about the most is obviously regulatory clarity. It's just important from sort of a long-term planning perspective. If you're a startup, you want to know that the products and services that you're actively developing or servicing clients with are something that you can plan with in the long term. And the other side of things is that regulatory clarity, of course, also makes you very attractive as an investment opportunity when it comes to, raising capital or deploying capital that you've raised. You want to do so in a trusted jurisdiction where you're also able to signal to the different investors or the different capital providers that, again, you are looking for sort of a long-term presence in a particular market. There's a strategy attached. There's a serviceable clientele pool that you can access via the market that you're situated in. So I think that played sort of an early role. The second component is access to both sort of financial and technical talent. Obviously, Zurich is a large international financial center and thus attracts a variety of skilled financial experts. But on the other hand, you also have the unique position of having the presence of large companies like Google, AWS, etc., that actively feed into sort of that technical talent pool. And you, of course, have strong technical universities that also sort of help generate that next generation of experts, whether it be ETH, EPFL, etc. You really have sort of young, fresh talents that are being generated via these sort of university components. And then, of course, the more experienced talents that are being churned out by the presence of both a strong finance and a strong tech industry. And then the last thing, and I think this is probably why it's taken hold the way that it has, is that it just aligns really strongly with sort of the ethos of Switzerland's culture, the way that our government is set up, right? The elements of decentralization, a strong focus on innovation. We're a small country that, is all about sort of optimizing the resources that we have, looking at how we can secure our positions going into the future. And that's then really mirrored in the government's interest and the way that they go about interacting with, let's say, different industries. And so there's just a long-term, again, component on the government side that wants to very actively engage with emerging industries, learn about what it is that they're building, and then really sort of provide them with the means and the support in order to viably explore that in a secure manner. And I think the reason why Crypto Valley, as we call it, exists today is really because very early on you had such a strong sort of feedback loop between the government and the industry itself that helped it to now sort of develop very organically over, the last 10 years, which I think there are few, let's say, blockchain-based hubs that can say we've had an established, community for 10 years going on. And that just shows sort of the overall resilience, the strength, and sort of that longevity mindset that I think came into the space very early on.
And I think if I may jump in here also, I mean, fully agree with what you just said, Tracy. And I think for us as a FINMA regulated asset manager, I think it's the regulatory clarity is one of the most important points that I want to highlight. And I think for us, FINMA made a great job in defining the rules, so it's very clear what the game rules are. And this helps us as an investment manager also navigate within this complex topic of regulation and rules, helps us to navigate quite easily. And if I look to our peers, if I speak to other managers from other jurisdictions, yes, it might be much easier to get a license, to get up and running, to get involved in the Middle East or on a Caribbean island. But things might change overnight and you need to adopt fast. And the last thing that you want as an asset manager, once you start to deploy capital, once you start to invest, is being faced with a completely new rule set overnight that you have all of a sudden to comply with and invest a lot of money. So I think the regulatory clarity that we have here in Switzerland is a huge advantage. And also the service providers that adopt to all these regulations, the service providers that are built in the ecosystem that we have, for example, with Markus and Sygnum, his employer. So I think this really helps to move the whole industry forward.
Markus, any views on this?
I mean, agreeing with it, I maybe add a bit more, not really crypto-specific elements that I think Switzerland is also providing, which is one very generic element. Switzerland is a small country with no resources. It has always been, and in the last years, facing a strong currency, and with that also a highly competitive environment to stay at the forefront of innovation and high quality services in an international landscape. So that has been one thing. And then a second thing also, looking at political turmoil, geopolitical topics, maybe also the COVID crisis and so on. Switzerland has been quite steady state during these periods, also looking back on European debt crisis and so on. So building a company with solid financing, with solid backing also from the state, tax environment and so on, and the broader just environment that allows you to build and move forward, that has also been beneficial to many industries. And I think crypto has been also part of that beneficiaries.
Thank you, Markus. Couldn't agree more with this point. And I would like to pivot on something that Philipp said regarding regulation and how FINMA have set such a solid pathway. Now that we have made this intro on the status of the Swiss digital asset ecosystem, what do you think that will happen, Philipp, with the institutional sphere in Switzerland that is looking forward to join the space? What do you foresee happening with those clients that are looking forward to be introduced to the ecosystem? How will you rate the pace of adoption for the rest of institutional players that are still not in this game?
I think, look, we have just to acknowledge that crypto is a very young asset class still, and I think still underrepresented in today's traditional portfolios. And I think over the next years we will see much more adoption. But I don't think that this will happen overnight. I think now with the Bitcoin ETFs coming in the US and the huge marketing story that they built around that, it's also the awareness that is getting increased. So Bitcoin and crypto as a general topic get more awareness within the investment community. There will be more liquidity, and I think liquidity is one of the most important factors aside regulatory clarity. You need also liquidity that you can deploy. If the large asset managers are joining, they need certain liquidity to operate and offer and build products. And speaking about the products, I think people that want to get access to crypto, they can. That's not a problem. But if you think about all the investment professionals, portfolio managers of traditional asset managers, I think there were not that many products out there still. So if you look at what traditional products you have, the multiple assets, instruments that you can use to actually form your view or deploy a view in a portfolio or reflect a view in a portfolio is quite large. If you look at crypto, there are still just a few instruments that you can use. And I expect more and more instruments to be launched, more and more strategies, also active strategies to be launched in the coming years, which will help that the institutional adoption in Switzerland will definitely increase. But I think this is a slow process that needs time and will not happen overnight.
Absolutely. And I think in here, players such as CV Labs are critical. Tracy, I've spent the last few days reading through the report that you guys brought to the market, that you disclosed in Davos. It's outstanding, the work you guys have done with the top 50 report. I would like to bring attention to this report now. Anything that you would like to highlight, Tracy, that you think that will provide an explanation on context on the amount of institutional players also on the VC space that are jumping into this market?
No, certainly. I mean, for us, again, what we've seen, and this is why it's so important for us to, publish the report on an annual basis, because even just the amount of transformation that you can see within 12 months is always really, really fascinating to sort of follow up on. Through publishing the report and through the different levels of research that we conduct in order to gather the relevant data, we of course reach out to a lot of the, sort of more traditional banking side of things here in Switzerland. And, what we've seen is really sort of, let's say, a thawing of what was a very clear freeze out when it came to all digital asset related topics. I think, again, for good reason, there were initial, concerns when it comes to particularly KYC, AML, risk management elements, etc. And, what we can look back on now is just a gradual maturing of the space. I think a big part of it has also been the industry learning the language of traditional finance. Again, that removes sort of that, let's say, fear factor of, this is something completely different, completely radical. It looks to change everything about, the way that we conduct business, et cetera. And I think what we're seeing now increasingly, it's actually more of like a coming together and more of a, multiple puzzle pieces fitting into each other rather than one completely replacing the other. And so I think that's changed the course of the dialogue quite substantially. I also think, again, elements like tokenization, et cetera, now being increasingly picked up within the traditional finance sector as an opportunity for them to, again, not displace what they already do as a core business, but to maybe enhance the way that they do certain elements of their core business, has also just made the dialogue much more proactive and much more productive. And you really see sort of an active willingness. Again, I don't think adoption will come, as an avalanche cascading downhill, but you see a willingness for there at least to be sort of an open forum and open discussion, and to learn about exactly what value the tech can now bring to the industry itself. And that's been a really encouraging thing to track over the course of the years. And it's something we certainly see continuing going forward.
Excellent approach. I think, Tracy, now if you allow me asking Philip as well and you, Markus, what makes Switzerland different from the rest? Many asset managers say that perhaps London is the crypto hub, or Dubai. Some say Paris. What makes Switzerland different?
I mean, I can just give my view here, and I think as crypto is a global and decentralized technology, it's going to be global as well in terms of different hubs, and it needs that to connect with the local investors and clients and users, and to connect also different teams with ideas and innovations to bring the whole ecosystem forward. And I think what maybe differentiates Switzerland from other ones, and it has been also mentioned a bit earlier in the discussion, is I think it has been very steady and unspectacular. This did lead to no huge hiccups in the past, also no large companies blowing up and having a threat on the discussions between regulators, market participants, traditional players in the space, but also leading companies that are paving the way for the crypto ecosystem. Then I think also, Tracy, you mentioned it or touched upon it. I think the discussion is very non-political in Switzerland, which leads to the fact that we find solutions, the latest one on staking with the regulator, and many other topics that has been also very beneficial and giving a smooth process here. And maybe a last thing also is not having regulatory clarity, but also having regulatory clarity for quite some time, and allowing to make experiences, adjust, maybe change some things, and get a better second version out, has been beneficial to the local system, besides other things that have been mentioned. But that's maybe the couple of topics I could think of.
And maybe if you look at this panel, right, I mean, we have a very diverse panel. So we have Markus from a crypto bank, which I think is also very unique, something unique that we have in Switzerland. We have Tracy from a venture capital firm. We have us Z22 as a crypto asset manager. And I think the diversity that we have in the industry in Switzerland is quite big. And also, I mean, the clarity and stability of Switzerland definitely helps. And for a certain reasons, you have a lot of the large crypto foundations based here in Switzerland. So they chose Switzerland as their place of operation. And I think there is just the environment that you find in Switzerland. And as soon as you travel a bit outside, as soon as you travel to South America, my wife is from Mexico. As soon as you understand what does it mean to do business in such a country, I think you really start to appreciate what we have here in Switzerland. And I think that's what also the people that came from outside and the international community that we have here in Switzerland in crypto, they realize and appreciate that.
Couldn't agree more. And I would like to highlight something that Tracy said, in which it's so peculiar the way you do business in general, and the way you react to fundamentals. And here I would like to pivot on the environment, as you said, Philip, right? The macro, now on the macro environment, it was critical to see what was the reaction of institutional players in Switzerland regarding the ETF, the first Bitcoin ETF being approved, and now potentially it's going to be very interesting to see how they react to this year halving, with a potential upcoming macro shift on the horizon. My question to you all is, how are institutional asset managers in Switzerland strategizing to adjust their portfolio allocation and to be prepared to capitalize on the upcoming opportunities in general?
Maybe my view on that specific topic is I would maybe split that answer a bit in two, right? Because for me, the macro shift per se, yes, it will be a driver, but it's usually more of a impacting tactical allocations and the cyclical view, while I think strategic shifts in a portfolio allocation, and with that moving money more long term into a new asset class is more detached to structural changes, right? And that's also what you mentioned, Michaela, with the ETFs, with new investment vehicles to be available to investors, with regulation, but maybe also with topics like U.S. government debt crisis and stuff like that, where you start to think about risks, credit risks, interest rate risks, correlations between asset class in a more long-term view, and you start to think about what can replace such risk and return drivers in your portfolio. And I think in Switzerland especially, but more generally, I guess we can say that traditional multi-asset portfolios have been mainly driven by execution only and advisory requests, but not really on a discretionary management point of view, that really the asset managers are in a broader sense driving client assets into that new asset class. And I think for that to happen, to really be strategically part of a multi-asset portfolio, it's important that those structural elements are driving questions like, how do I find new growth assets? How do I find new sources of yield? How do I find new ways of diversifying my portfolio? And then also what I think is important is that also we as a crypto industry, we need to provide valuation methods, portfolio construction guidelines, or supporting information to help traditional portfolio construction and investment decision processes to include crypto in a way they can relate to and understand, and make it also clear for their clients and employees to feel comfortable. So I think that's one thing I guess is important as well to make that move happen.
And I think I definitely agree with what you just said, Markus, because I'm not really sure whether it will be the macro, this macro shift or the macro environment that will drive the adoption. I think it will drive the narrative. It will drive how people, that they start to read, that they start, oh, there is now an instrument that I can actually buy. So I don't need to buy and self-custody it, or I don't need to store the keys for my client and then I will lose them. So what will happen? So I think there will be much more easier access, so people can start to also think about how to incorporate it. And we as a quant hedge fund, for us, we look at crypto from first of all, it's for us, it's a strategic asset class that we want to have exposure to, because it's an asymmetric trade. And I think the asymmetry that you have on the upside, I mean, of course you can lose everything of like every investment, but it has also a huge upside potential. So that's the asymmetry that we like here, if we think about Bitcoin especially. And on the other hand, it's all about finding new alpha stream, finding new uncorrelated alpha streams that you can add to your portfolio. And it's quite it's not that easy to find those building blocks that you can add that really bring you a certain diversification. And for us, this is crypto is definitely a building block that you should think about as an uncorrelated alpha stream to add to your portfolio, but maybe not only as a long only allocation. So I think from us and from our perspective, you need to have an active approach, especially on risk management, because the drawdowns can be severe. The drawdowns that you have to digest over multiple years, or even within a year, you can experience several drawdowns. Like 2021 was a very good example. The 2021 Bitcoin was up, I don't know, about 80%, but within the year, you had about 5 times a drawdown larger than 30%. So in order to capture and capitalize on this huge upside return, you needed to digest a lot of downside vol during that time. So I think having a good risk management in place and a good risk management or an active strategy that helps you to reduce those drawdowns and helps you to navigate through that volatile market is definitely a key. And I think from our perspective, we see that over the next years, there will be more and more also active strategies coming up left and right, that can be offered and can be used as those uncorrelated building blocks within traditional portfolios.
I'd like to make an emphasis in that. You highlighted how those stratified portfolios are slowly merging with alternative investments. And Tracy, Philip, you specifically have been working for years with traditional LPs. What is their appetite regarding those new investment vehicles? And if we can, let's say, limit or filter this answer specifically between, I would say, second semester of last year with the current ones, how in the last few months this appetite have increased or changed? What are you seeing in the way that they are acting? LPs specifically, what is their stance?
I mean, we can definitely see increased interest, right? Again, it doesn't get lost in the media cycle, the amount of, let's say, positive, so that positive wave that is generated by the discussions in and around ETFs, etc. Even prior to sort of the formal announcement being made, I think sent sort of a wider echo out into the industry that, what had been sort of a long drawn out bear market, where I think in general, it's quieter. It's not as depressed as it used to be in previous bear market cycles. I think there was still a lot happening behind the scenes that was really encouraging. But I think there was certainly a certain amount of euphoria that had been reawakened within the industry. And that, of course, then has sort of a, that makes waves outside of our own industry. And so you could tell that, of course, interest is peaked. However, I think, again, increased interest, increased access is great, but only when it's coupled with increased education as well. I think it would be misleading for us as an industry to think that just now, because we've now sort of opened new avenues of access, that capital will just come pouring in. I think there's still, a lot of demand and a lot of education that needs to happen on both ends in order to sort of familiarize this now new, sort of class of LPs that we have access to with an industry that is very, is very shaky in the way that it is perceived. We are still, despite, again, huge advancements being made on the technical side and there being a lot of substance to the space, we are still very much subjected to, media cycles, media hypes, etc., that can either, really drive or really tank the overall perception of the industry. And so we're slowly making our way through that, and it's getting less and less extreme in terms of its swings. I think you see more and more now, even during bear markets, you'll have traditional financial players that are coming out and being very vocal and very positive about the industry, which I think shows that there is an underlying shift in the way that it is perceived, and it's we're slowly being separated from that hype. I don't think that has fully decoupled yet, and so we just need to be very mindful of the projections that we now make, the assumptions that we now put out there, the way that we talk about, what the next 12 months are going to look like. Because again, we have a platform now. People are very much listening, but they are also still critical. And I think it's important that we don't forget that.
Maybe if I may add, I think, as mentioned earlier, I think crypto is still very much underrepresented in most of the traditional portfolios. And as soon as, and media obviously picks up when you read in 20 Minutes or Blick here in Switzerland, when you start to read about crypto, then you can be sure that the asset class performed more than 100%. That's usually when media picks it up and the headlines and the stories. And but what we see, and I mean, you just have to acknowledge it's a very young asset class, and the accessibility and the possibility to invest were still very limited for professional clients and institutional clients. So I think this will need time. This is a shift that will not happen overnight. And most of the portfolio managers in large asset management firms, they have a background from a traditional bank. And I think your experience, the time you grew up, whether you start investing in a bear market, whether you start investing in a bull market, is really much giving you a certain, let's say, boundary, a certain change, definitely shaping your thoughts and your decisions and how you perceive risk and what you actually do. So I call this kind of the frame of reference that you have. And we just have to acknowledge that most of the investors as of today, for them, it's also a very new asset class. And then think about the end investor, right? We're always speaking about our clients, which are institutional clients, family offices, so I would say investment professionals. But think about the end client client, which can be anyone, right? So they have to also adopt, they have to also understand and learn much more about crypto, because I think there are so many misconceptions and prejudices that clients have about crypto. So crypto is seen as the currency of terrorists and money launderers, that is mainly used for illegal activities, hiding the ultimate beneficial owner, as the compliance likes to call it, or try to hide something from the government. And that's, I think, we have to overcome that hurdle first. And we only can overcome that by educating, start reading. And that's what I recommend everyone. Give it a fair chance. Dive into crypto, dive into that rabbit hole, because I can guarantee the more you start to read and the more about crypto, the more you start to like it. So I really recommend everyone, do your own research. Don't just believe what's written in the mainstream media, and give it a fair chance to evaluate whether it has whether it can be added to a portfolio or not, whether you want to give it a chance with a small portion of your asset allocation.
Do your own research. Highlight of the webinar. Thank you so much for your insights. Couldn't agree more with all of them. I would like to now shift the conversation to crypto banking, because this is very requested topics by our clients. And here I would like to highlight the incredible job made by CV Labs in the World Economic Forum Week, putting together the biggest crypto banks under the same roof. Congratulations, Tracy and the CV Labs team. B2B crypto banking in Switzerland was booming last year, and this year won't be the exception. Tracy, I would like to ask you, and then perhaps the speakers can follow up on this. How will B2B crypto banking in Switzerland, how will they keep evolving and growing to accommodate the demands of clients?
Sure. I mean, we have the pleasure of having a crypto bank in the call, so I'll definitely defer to Markus later on. But maybe just from our experience, obviously, through our portfolio, we assist a lot of companies in going through sort of the process of setting up within the Swiss jurisdiction, and then banking, of course, immediately becomes a topic. And a lot of the people that turn to us have often had very negative experiences or very frustrating experiences in other jurisdictions. So for us, it's very clear that particularly the B2B aspect of banking options for crypto companies or blockchain companies, even in a wider sense, is an incredibly important building block in sort of any functional digital asset ecosystem. They need to access banking services to do just simple operational things, whether it's paying employees, paying suppliers, et cetera. And at the moment, there are few options, and Switzerland is lucky enough, incredibly lucky, to have an established sort of digital asset friendly banking sector that is above average, I would say, in terms of both the service options and the sort of breadth of the representation that they encompass. But there are still some key challenges to sort of further adoption, right? Things like very high compliance costs, which is, again, a very important component of making sure that these services function within sort of an appropriate risk environment. So that just makes it very labor and resource intense when it comes to actually providing these types of services to customers. So I think there's definitely still room for optimization. Again, because we don't anticipate that, the jurisdiction will become less attractive. We'll certainly, expect more influx, particularly as, we hope for a market recovery within the coming months. That generally then has a knock-on effect with companies now starting to consider sort of long-term setups. As they look at Switzerland, we certainly anticipate that we'll have more people knocking on our door, which is a huge opportunity for the likes of Sygnum and Amena, formerly Seba, and a lot of the more traditional banks that have sort of made that step into the digital asset space, like Philipp Baumann, like Bank Frick, some of the cantonal banks that have followed suit. Some of them have unfortunately had to roll back now, again, due to high compliance cost concerns, etc. So there's an opportunity also, I think, that presents itself in the coming months for particularly this sector to really now sort of, experience sort of that next boom. But I'm happy to defer to Markus and his team. Obviously, this is something that they deal with on a daily basis.
Yeah, thanks. Happy to add maybe a couple of words without going too much into details. But I guess, you know, this is the combination of traditional and crypto services, and bridging those two is opening the door for adoption and for exploring the new asset class, and also approaching a broader audience, I think. And that's one main component of helping the ecosystem be an accessible ecosystem, being a fully regulated ecosystem in our view, for sure, and also being an ecosystem that, you know, allows maybe early followers or more traditional players to benefit from companies that have been fast movers, that have been following a very dedicated roadmap and company objective, to then also, you know, provide services to other companies that just need to have some support, because crypto still is a tech regulatory heavy topic, and it might make sense to work together with service providers that have experience, have the team to really allow for that. And I think this is also, we have been talking about, you know, what makes Switzerland a great place for crypto, and maybe other countries also being great places and involving now more and more. That is definitely also part, and it will most likely not stop here, because it's essential for many involved parties.
Philip, any views on this? Any views on the asset management side? How are asset managers in general integrating institutional grade custody and banking custody in their own business models?
I think what Markus highlighted, and that definitely resonates with us, I mean, the combination of different strengths, I think, is very important. So for us as an asset manager, for example, having access to a trading platform like Binance with its liquidity, with all the features and everything they offer, but still can offer our clients a fully regulated bank, like, for example, Sygnum or any other of the banks that were mentioned in the call, Bank Frick or any cantonal bank. So a fully regulated traditional bank where you custody assets. So combining these two, I think this is a very important thing from our perspective. We see, I mean, the tripartite agreements that are coming, and I think I mentioned it also to you, Michaela. I think we were very happy to read that Binance is also pushing in that direction, and I think this will be a very important direction, for example, for institutional asset managers, because we still have a lot of standards that we need to comply with. If you are a FINMA regulated asset manager, if you are an SEC regulated asset manager, you cannot work with an unregulated exchange. So this poses certain limits on what you can actually do to really get the full experience, the full crypto experience. And I think now we see more and more exchanges realizing that if they want more institutional clients trading on their platforms, and we're not only speaking about the prop shops, I mean, there is quite easy. I mean, for us, it's quite easy. We're happy to take the risk of Binance. But for others, if you start to manage third-party money, then you think differently about risk and about counterparty risk, and not only because of FTX. I think FTX really showed everyone what it means when a counterparty goes bankrupt overnight. But it just shows if you manage third-party money, you are very, very risk averse. And I think this is really great to see that more initiatives are coming into that direction, where you try to combine a traditional bank, or be it a hybrid like Sygnum, where they try to combine, traditional banks try to combine their strength of bringing secure, trusted custody with the trading capabilities of a platform like Binance. And this is, I think, what very much will also be needed in the future for asset managers. Unfortunately, the onboarding on if you mention crypto in an onboarding, that's a huge pain. We have onboarded many different entities, and we are a fully FINMA regulated entity with regulated fund structures. If you start the onboarding, this is a nightmare. So you can think about 3 to 6 months. And 3 to 6 months in crypto is a lot, so you can miss out the greatest opportunity to show your strategy works in a booming or in a bear market. So I think there is a need for more lightweighted onboardings for regulated entities from the service providers. I know the service providers, they have also to comply with a lot of laws in the background. I think, Markus, you can definitely confirm that, and it's not that easy. But still, I think going forward, we need much more lightweighted processes for regulated entities to get onboarded on both sides, on the crypto exchanges, but also on the traditional banks, that we can fully capitalize on the combination of the synergies of this more novel world and the traditional finance world.
Maybe just then on a parting note, I think something that's worth highlighting then, and it speaks really well to what Philipp just mentioned, right, is that this is also a very interesting opportunity for collaboration between sort of these different, these different components. I mean, look at what Sygnum is doing with, some of the more traditional banks, right? This is an opportunity for them to also become sort of a service provider to those types of clients, because they may not be, ready to take on that full capacity in-house, but they're certainly interested in having some options when it comes to slowly but surely entering that sector. So I think, again, it could also service as sort of a nice opportunity to start, again, fostering different types of connections between all of these different elements, which is certainly exciting as we look at the next 12 months. And again, what we anticipate will sort of be a knock-on effect of hopefully a recovering market.
Excellent points on the collaboration and also on the high standards in terms of product. Philipp, I was shocked with what you said. I do think that your insights are a mirror of what the asset management space in Switzerland is requesting, right, from all those key players. The Swiss asset management industry is well known for its high standards in terms of quality and performance. And based on this, on what you just highlighted, I would like to bring another question on terms of products. What are the products that crypto asset managers in Switzerland are requesting the most? Where are we going? What is the trend that we might see this year? Any views on this? And again, the question is open for all the speakers.
Maybe if I can start. I think from investment product side, as I highlighted earlier, I think active risk management is definitely key. And I think that many people realize that. I mean, 2020, 21 were fantastic years in crypto. You can buy literally everything and it doubled overnight. So people got a bit, why do I need risk management? Why do I need to think about drawdowns? Everything is going up. Happy days for everyone. And then hit 2022, and you saw it on the traditional portfolio side, equities down, bonds down, but you also saw it in crypto market heavily down. And I think 2022 was a wake-up call for most investors, that they realized it's not just long only, and I can hodl. Because at the end of the day, you have to report the performance to your end client, and you can be sure your end client will ask and start to ask questions if something is down double digit. And then you will need to explain. And this will bring you, as an asset manager managing third-party money, into a very uncomfortable situation. And I think now in the traditional finance world, we have seen the shift from active strategies to passive. So more and more gets passive with ETF, indexed, everything gets indexed. I think in crypto, we start now with Delta 1 products, but we will see a shift in the other direction, that we will see more and more active strategies emerging, and people understanding the benefit that active strategies, like one strategy that we have where we try to capitalize on the vol of the market with a non-directional approach, that you try to capitalize on these opportunities that the market is offering you, because crypto is still also very much inefficient. And then, so this is from my point from the investment perspective, but then what asset managers need for as products, I think the tripartite, we have touched already on that. I don't gonna go deeper into that again, but I think, again, tripartite is a very important factor for this adoption. And I think a product that, if you speak to asset managers, is highly requested. Light onboarding, we touched on that as well. I think affordable bank accounts, because as soon as you start and mention crypto, all the service providers have a second price list, and you realize that you pay a huge premium for just operating in crypto. We saw that in the Cayman Islands with our fund launch. We see it here. that is just perceived as high risk, and high risk means everyone is charging you double or triple. So I think affordable and easy accessible solutions will be key. And then one last point that we also realized during now our product launch is when we manage our prop money, it's a completely different approach in terms of counterparty risk and also accessing the exchanges. So in our case, it's just my co-founder Armin and me that have the access to the exchanges and to the funds, and we can move them, of course. But now you think in an institutional grade setup, you all of a sudden are faced with, oh, we are doing the onboarding on Binance, for example, and we have the key, we have the master key, we have the 2FA. So we have basically everything. We can move money, we can wire money. Then you start to ask the service provider, so, hey, how are we going to do that? So who is managing actually the account? And then you realize that the role management with different user roles and different access rights is not there yet. So none of the crypto exchanges is really offering an institutional grade role management where you can define different roles from an administrator, auditor, portfolio manager, and so on. So you cannot, and within the portfolio manager, you have also different roles that you need to define, and the roles need to be segregated with access rights and so on. So you realize that there is nothing there. We tried to find a solution. We are also happy to pay for it, but we just couldn't find an affordable solution. And then I think one good thing about being a quant shop and being programmers is that we can program. So we built our own tool. So we built a multi-sig tool to actually manage and lock all the logins into the different trading platforms, that you know exactly who accessed when, which exchange, and wanted to initiate which transaction or wire, or what was adjusted. So you kind of have a backlog of all the activities, and you can really then segregate with the directors, for example, in the fund, with the portfolio managers, that you have multiple approvals in order for the asset manager, in this case us, to access the exchange. And I think this was a pity because there was nothing out there which we could really use. None of the exchanges could really offer us a solution which satisfied us. So we built it. We built an own solution, and we are more than happy to share that with everyone that has a need for that. Because I think this is very important, that these roles are segregated, and that it's not just one single person controlling the account, because that's what you ultimately don't want to have. You don't want to just trust one single person that has access to all the funds that you have on an exchange. And that's actually these would be, let's say, the four points that, or the 5 points that I think are where we see the most demand also from us as an asset manager.
Thank you, Philipp. Thank you, Philipp, for such an insight. I believe you are now the voice of many asset managers also in the space, and this has been quite insightful. Also from an exchange point of view, to see what are your demands. Tracy, you also have a very first line exposure, I would say, with the startups and ideas that they're bringing to the table. What are those products and services that you think that it will be very much demanded this year? What trend are you foreseeing?
I was a bit a bit touchy when it comes to trend forecasts. No, look, I think as a space, it's no secret to us that of course at the moment AI seems to be a powerhouse, particularly when it comes to where capital is being deployed. It is just having its moment, just as DeFi had its moment, a couple months earlier. So we're sort of moving on to the next topic. AI is currently one of those. We do think blockchain has a role to play when it comes to sort of AI, and again, there are very interesting applications also from sort of the trading point of view when it comes to how optimized strategies can be sort of enhanced through AI components. Again, here, I mean, Philipp, I'm sure can add his 2 cents. So I think we are excited looking at sort of where we see the overlap going forward, but we're also very wary. Again, in our experience, the second you're touching a trend topic, it just means that valuations for projects are just absolutely unrealistic at times. So we always sort of engage with caution, but in general, I mean, we're just We're big believers in the underlying tech because we're so active on the application side of things. We're just big believers in sort of the true potential of the underlying tech to be sort of a value add to really business use cases is still left to be explored. We personally are very, very interested in sort of what it means for particularly developing markets. When you look at the value proposition of blockchain tech, so much of it, I think, is very apt for developing markets where you're looking at deploying products that don't offer an alternative to existing infrastructure that is there, but really sort of fill a void or fill a gap that makes it, one, sort of obviously more attractive, but also a bit easier to justify its existence and its adoption. So we're paying particularly close attention to Africa, where we've seen really stellar founders, many of them, either diaspora or educated internationally, that are now going back and really sort of eager to roll up their sleeves and to start deploying interesting MVPs, interesting products that will, solve sort of very, very straightforward use cases when it comes to things like proof of authenticity and, land rights registries and that kind of stuff. So that's certainly something we're paying attention to. Whether or not that's sort of a wider trend, who knows? It's just certainly something we're really enthusiastic about and paying close attention to going forward, not just in the short term, but also in the long term.
Thank you, Tracy. I know you don't like to give forecasts, but everyone was taking notes, even me. Well, unfortunately, the time has come.
I can give you a good forecast. So the one thing that we know is the market will move either up or down. So that's the only thing we definitely. I can assure you, one of the two will happen for sure within the next 12 months. And maybe just another point to add, I think. You as Binance, you see such a diverse community of people, right, interacting and being client with you. And I think connecting people is something very important, that people speak with each other, exchange ideas, get connected. And I think this is the beauty about crypto. Crypto is very, very collaborative. So the crypto community is very open to engage, to discuss, and that's what we see if we compare discussions with peers on the TradFi side, with our peers in crypto. It's more of a transparent and arm's length discussion that you have with others. And I think this will be very important, especially for hubs like for example, now you, Binance, and Michaela, to connect the people within the industries, that they speak with each other and maybe eventually come up with a collaboration or a new idea, or start just speaking to each other and exchanging ideas. And I think this will move everyone forward and will also help that we can help also more traditional asset managers to get educated about crypto and to give them a more or a better understanding of what it's all about, and helping them to understand how they can potentially, for their benefit, also integrate it into their asset allocation and portfolios.
Yeah, no, I couldn't agree more. And also, I think this exact webinar is an example of that, right? We had 3 different speakers from 3 different backgrounds doing different with their different missions, and the idea of Binance VIP Voices was just to join different key players and see how are they impacting the markets in their own way. Again, thank you to all of you. Unfortunately, the time has come to wrap up this exceptional episode, but again, just wanted to say thank you on behalf of Binance. We are indeed collaborating with the 3 of you on different fronts, and this episode was quite insightful. We all find ourselves reflecting on what's next in the Swiss ecosystem and the global market as a whole, and your views on institutional crypto adoption have shown, I would say, some key areas ahead, some key opportunities ahead. Tracy, Markus, Philipp, before we wrap up, where can viewers find you? How can they connect with you? Could you share your social media?
Sorry, please, no, for sure. Please go ahead. I'm on Twitter. I'm on LinkedIn. I'm not particularly good at reading my LinkedIn messages. I will let you know now, but Twitter might be the better way to go. But please do feel free to connect. Would be thrilled to hear from you guys.
Same here. I mean, feel free to connect via our website, which is just our name.ch, or you also find me on LinkedIn. I'm quite active there. Try also to respond as fast as possible to all the messages that I get. But if you hit me up there, I will definitely will get an answer within a short amount of time.
Yeah, same here. Google Sygnum. You find me on LinkedIn. Reach out. It was great being here. Thanks for having me, and yeah, talk to you.
All right. Thank you. Thank you all. Thank you for joining the space, and we look forward to having you again in the future. Have a great day.
Great day. Bye-bye.